Hi, good morning, good evening. Welcome back to the Tummy Investor channel. This is a channel where I periodically share my personal experiences and perspectives of investing in the Indian and now global equity markets. Um, as always, before proceeding, please don't take anything I say at face value. Investing is subject to market risk and there's at the end of the day, it's your hard-earned money and wealth that you're putting into the markets, and so please kindly use your judgment. Um, so I thought I'll just do a video on just the state of the market right now. It's Friday, of course, and the whole week has gone by. And if I can just summarize how the market is behaving, in terms of the frontline indices, it would be just sheer madness. There's no other way, there's no other adjective I can think of. Maybe it's too strong a word right now to use. Maybe I'm acting like a um, ugly duckling or somebody who's acting as a dampener, but I really personally feel that the market has overrun a lot in its enthusiasm and the kind of valuations that are currently in some of these companies are trading at. And it's, at least personally, I'm finding it very difficult to now start entering companies that I want to buy and hold in my portfolio, purely because the entry price point seems just too expensive, in my opinion. Um, so that's my overall assessment of the market. I don't think it has changed a lot in the last few months. Um, as I mentioned in some of my previous videos, the last transaction I made was at the end of May or June first week, somewhere around that time frame. And then after that, really, I was hoping there will be enough triggers for the market to correct. And uh, but just just the fact that there's so much of liquidity in the system, not just within India, but globally coming from the US markets and other markets is really creating a situation where there's a lot of money chasing very few quality assets, and that's why you see the headline uh, Nifty and Sensex indices going up the way they have been going. And you know, it at one level, obviously, past experiences told me not to get sucked into this. But at the same time, I also want to share this perspective as wide as possible because many beginning investors get sucked into a rising market in the fear of missing out. And it's very interesting. Some of these experts that come on TV or give interviews, they tend to completely go away from the limelight when the market is going through a severe correction. Very few of them actually venture out and give their opinion at that point. Whereas with the moment, the market is on an upward trajectory for a sustained period of time, everybody seems to jump onto the bandwagon and say, you know, how the future is looking so bright. Now, as investors, um, who, as common investors who put in our own hard-earned money into equity in the hope of making decent returns over a long period of time, um, the retail investors always are the guinea pigs. They are the ones who come late to the party, and just when the carnage begins in terms of a correction, they are the ones who bear the brunt of the losses, while the big guys actually, are able to make an exit. So A lot of it is, if I would, just introspect on my behavior and the kind of mistakes I've made, is obviously driven by fear of missing out. And obviously, there's a lot of, peer influence as well. And so it's important to just not get sucked into it fully. It's very hard to not to be influenced by it, but at the same time, please remember it's your hard-earned money. And so just be, as always, my request is just to be careful about it. Um, Now we are all humans, so we do get ruled by emotions of greed and fear, and these are the two primary emotions when it comes to the markets. And right now, if I were to summarize this, greed is the emotion that is there in the markets. I mean, some of the things that you will read on the internet is just really perplexing to me, and I thought I'll share that. And again, my idea is not to criticize people or criticize experts or so-called experts for their views. It's just to present an alternate view, or at least present my view in terms of how I'm sort of looking at the markets right now. And there have been occasions where I have been tempted to consider certain companies to invest in, even in these heady times. So far, I'm sort of still debating in my mind whether it um, makes sense to enter into the market right now or not. But we'll see. Um, we'll see how it pans out from personally for me. But let us just look at some of these headlines. Taking stock, bulls back on Dalal Street, 100 stocks hit 52-week high. Now imagine a situation, this is an exceptional year. Um, we've had the biggest pandemic crisis earlier in the year, which is still ongoing, and most of the large economies have had to shut down abruptly. Global supply chains have been influenced and impacted, and we have started seeing shoots of recovery. I won't deny it, but does it justify the indices and some of these stocks to um, go to their all-time highs or all-year highs, and uh, in the hope that earnings will follow? That's the ultimate question. And of course, we all know what is triggering the market to behave like this. This excess of liquidity. Um, People are betting on the future. People are betting on earnings recovering. But even if earnings were to recover, it'll still take 2, 3 quarters for us to really understand and get a clear picture of how the economy is behaving. The other contributing factor is, of course, this whole talk about the vaccine coming in and being deployed and made accessible to people. But there also, we really don't know what will be the nature of the vaccine, and how much it'll be able to solve the problem, if I could put it like that. And so, in my mind, I feel um, the next few quarters are going to be important for us to really get a sense of where this is going. Now, the counter argument will be that stock markets are forward looking, so the price always leads earnings in most cases, and the markets are just smart and ahead of the whole thing. But I would like to just respectfully disagree with it. I think this is a time for caution. Uh, and you know I would, at least that's what I'm telling myself, in terms of what to do. And I was reading this interview about this gentleman who's responsible for Taurus Capital, and he says this year will be a year of consolidation, and we'll, the funny part is people have now started talking about FY22 earnings. Nobody's even thinking about FY21 now. And uh, I found one line really interesting which I wanted to share with people. You know, if the market sustains or moves up from here during COVID vaccine, continued demand recovery, global liquidity, we might again start seeing inflows due to left out feeling. Now, this is exactly what you don't want to encourage within investors, which is the fear of missing out. Like I mentioned, I've personally lost a lot of money because I saw everybody else investing in the market, and uh, I felt actually very stupid not to do it. And so this whole emotion takes over you, and uh, then you end up putting money on companies at high valuations, and then either the returns are very subpar going forward because the price is already factored in the returns, or in worst cases, you actually end up sitting on losses and then you're hoping for a recovery, or you do a distress sale and then you end up selling at a loss. And you know that does that mean that we shouldn't be investing in the markets now? By no means that's what I'm saying. All I'm saying is uh, at least I'm trying to be very cautious and prudent in terms of what companies I'm investing in, and um, not sort of going full on overboard with it, if I can put it like that. I'll still probably make mistakes. That's just the nature of the market, but at least as much as possible, I'm trying to keep that in the back of my mind. Just looking at the numbers, of course, like I mentioned, the Nifty has been up 0.6% this week. Uh, and, you know, over the year, in this difficult year, the Nifty is up 7.5%. Uh, the P at the start of exactly 1 year ago for the Nifty was 27, which in itself is very high. But then now we are almost touching 36 levels, and it has never been high so far. So, experts say that this is a very unique situation. We've never had a situation where we've had such liquidity uh, excess everywhere in the system. Um, and interest rates are coming down, so markets will continue to go up. Um, I don't know. I honestly don't know if that is the case. All I can do is say for myself, and my current way of thinking, like sounding like a broken record, is of course to keep an eye on the market, pick your favorite stocks that you want to get into, keep tracking them very closely, and just wait for an opportunity to get in. And not be so fixated with a particular price point, but as long as it comes within your range of value, buy whatever you feel is the value the company has to offer. Then it makes sense to get into some of those good businesses which can ride out these turbulent business cycles, which have a competitive advantage, which have institutional uh, structures to stay ahead in the market. uh, you know, those will be some of the companies that will be able to ride this out really well. And we'll continue to track the market. I'll continue to look into the market. I have been looking at a few companies, especially in the Nifty 500 list, but so far nothing much has really come out as very appealing as such. But then again, we'll see, how this whole thing pans out. But that was just my short take on the market right now. As I said, whenever I do this, at least in the near future, it looks like things will continue to remain the same. But I would love to hear what others are doing in this situation. I think if there are views that come out from this, collectively all of us stand to benefit. I'm pretty sure There are alternate viewpoints in terms of how to navigate this market condition. So please, by all means, keep sharing your feedback, and then do subscribe to the channel. And if you like this video, do click on the like button. Well, thank you so much, and wish you all the best. Have a good day.